New economic data out today. Will it keep that Santa rally going? In today's cover story, headlines from the sky, why 2015 will bring big changes for airlines, why the Sony hack attack is providing a kind of scary glimpse into the state of cybersecurity in our country, and our emerging markets the new hotspot to invest in the new year. First Business starts right now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Well, good morning. It's Tuesday, the 23rd of December. I'm Bill Mahler in for Angela Miles, and here is today's first look. Well, today, economic indicators is where investors are going to be looking for market drivers. Economic reports on third quarter GDP and durable goods orders. They come out later this morning. And talk about your Santa rally. 4 straight days of gains. The Dow and the S&P there, they had enough wind left in them to continue to close at record highs. The NASDAQ also in the green. Oil continued its slide off another $1.75 a barrel to $55.37, and gold down $19. OPEC nations say the sinking price of oil is not their doing, though it's sure their problem. Saudi Arabia and the United Arab Emirates say they're going to just keep pumping the stuff out of the ground. They blame the current glut on non-OPEC oil-producing countries. And Facebook shares are trading at an all-time high, up nearly 50% this year, all due to expanding mobile advertising. Also, acquisitions are paying off. Take Instagram, for example. Facebook bought it for about $1 billion 2 years ago. It's now worth 35 times that much. And our trader for a Tuesday morning is Mark Sebastian. He's with OptionPit.com. All right, Mark, Monday wasn't all that exciting. Everybody was up, but I guess that's somewhat to be expected on a holiday week like this.
Yeah, we generally expect the holidays to be a little bit slower. And honestly, I was hoping for some slowness if this rally that we had last week is going to have any real sustenance to it. We rallied almost 90 points in the S&P, over 800 points in the Dow in 2 days. So getting up days that are a little slower, a little more relaxed, a little more calm, probably good for the market as a whole.
Yeah, it kind of gives you some breathing room to reflect on everything that's happened. I saw there was some separation between the S&P 500 and oil shares. What do you read into that?
Yeah, one of the big things that was interesting about kind of the sell-off that we had was that oil and the S&P 500 were correlating very tightly. Now that oil was down yesterday, but the S&P up a little bit, that's a sign, again, that maybe oil's finding a little bit of a bottom, and the S&P maybe is going to keep rallying toward that 2100 level.
Okay, well, you're talking about maybe here with the S&P and maybe with oil. How do we know once a bottom has hit, unless there's been a great turnaround? Is there some sense that actually could happen in the coming weeks?
Yeah, I do, and I think you're going to see a lot more mergers and acquisitions. We had one last week, Talesman Energy getting bought out. If we see a few more of these smaller energy companies getting lifted, that's a really good sign that the bottom's in.
Mark Sebastian with OptionPit.com. I see your tie. You're going to be trading most of this week then? You're not taking any time off?
Taking a little bit of time off, but probably not till next week. I'm going to trade through this week.
All right, there's money to be made. Okay, Mark, thanks.
Thank you.
Well, you know, Sony's got to be wondering when this hacking nightmare is going to end. The company is still scrambling to contain all the fallout of that hacking scandal that leaked private information about the company and its employees. Sony Pictures pulled the release of that new film, The Interview, after hackers had threatened violent attacks. The FBI said last week North Korea is behind all of this. The Interview is about an assassination attempt of North Korea's leader Kim Jong-un. Meantime, this scandal is really magnifying issues of cybersecurity for businesses. Richard Kelsey, he's an assistant dean at George Mason University School of Law. He says private companies are long overdue to upgrade their protection.
If sophisticated hackers have decided that you are a target, you better have the most up-to-date cybersecurity posture, because even then you are going to be taking withering attacks that are at a minimum going to slow down your business and make it hard on a day-to-day basis to conduct business. That's the new reality that we're in.
And cybersecurity stocks really took off yesterday. FireEye stock shot up 7% before closing down 3 cents. Checkpoint Software Technologies rallied 1%. And now here's Chuck Coppola with the latest on an economic crisis in Russia.
Good morning, Bill. Russia's economy will be downgraded to junk status in 2015. Russia's former Prime Minister, Alexei Kudrin, says that the country did not address its financial problems fast enough, pushing it into an economic crisis. He predicts inflation in the coming year at 12 to 15%. Kudrin, a critic of Russian President Vladimir Putin, quit his position in 2011 over proposals to increase defense spending and warned of junk status.
You know, among U.S. states, there really are winners and losers in the oil sweepstakes. The low price per barrel is really hurting Alaska. It depends on oil for 90% of its revenue. The other big oil producers, Texas, North Dakota, California, the pain is a little less simply because, unlike Alaska, their economies are much more diverse. And cheap oil means cheap gas, and the last time it was this cheap, May 2009, the price dropping another 15 cents a gallon in the past week. The average now $2.39 a gallon. That's 85 cents below what it was 1 year ago.
In our cover story, a new airliner, new frequent flyer rules, and a new theory on what happened to the Malaysian airliner lost earlier this year. It's all part of changes in the sky. Qatar Airways took delivery of the first Airbus A350 ready for service Monday. The aircraft is the first entirely new wide-body jet to be delivered since Boeing's 787 Dreamliner 3 years ago.
I think Airbus played it smart. They sort of let Boeing go first, had some of the learning curve issues they overcame.
Less than a month from now, the A350 will be in service between Doha and Frankfurt, later on U.S. routes to the East Coast. Airbus says it has 778 orders for the A350. So far, Boeing has delivered more than 200 Dreamliners with a backlog of 800 more. For the year, Boeing is running ahead of Airbus in new orders.
Give an edge to Airbus here on just starting the new year with a full head of steam.
Besides new planes, business travelers will see more frequent flyer programs aimed at them.
They want that high-end traveler, and they're really lasering on that person's needs. And those persons saying, we want upgrades, we want early boarding, we want fewer blackout dates. And that's where the activity is happening.
And another voice has been added to those who believe that U.S. military forces may have downed Malaysia Airlines flight MH370 as it neared the remote island of Diego Garcia in the Indian Ocean. In French magazine Paris Match and to French radio, the former chief executive of Proteus Airlines, Marc Dugain, said it's an extremely powerful military base. It's surprising that the Americans have lost all trace of this aircraft. Without getting into conspiracy theories, it's a possibility that the Americans stopped this plane.
It's in the realm of possibility when you look at that part of the world, just the heightened military presence everybody feels with China and so forth. This story may have some legs.
Dugain cites witnesses in the Maldives who saw a huge plane flying at a really low altitude bearing Malaysia Airlines colors, and an unconfirmed report of an airline fire extinguisher washing up on the beach. Dugain speculates that the airliner may have been mistaken for a 9/11 style attack on the military base at Diego Garcia. The head of Emirates Airline, Tim Clark, echoes concern, saying information is being withheld. The U.S. government has repeatedly denied that the plane came near the island.
After 4 years, Goldman Sachs is selling its metal warehousing unit. The metal business was the subject of a Senate hearing last month. Evidence was presented that the company, Metro International Trade Services, had manipulated the market to drive up the cost of aluminum. Metro has now been bought by a Swiss investor for an undisclosed sum.
The U.S. is hitting French company Alstom with a record fine for bribery. Alstom will pay nearly $800 million to the U.S. Justice Department. The power company, which makes train cars, has been under suspicion of paying tens of millions of dollars in bribes to government officials in Indonesia and in other countries to win power contracts. In June, it sold most of its energy business to General Electric.
Express Scripts is choosing AbbVie over Gilead Sciences for a new hepatitis C drug. Express Scripts is rejecting Gilead's drug Sovaldi, which costs $95,000 for a 12-week course, for the slightly cheaper option, AbbVie's Hep C Viekira pack, at $84,000. Gilead stock dropped 14% to $93 after that announcement. AbbVie was up nearly 1.25 to $67.
American Apparel confirmed a buyout offer from a private equity firm. Reports say Irving Place Capital is offering $245 million for the struggling clothing chain. The company also adopted a shareholder rights plan to protect itself from unwanted suitors, similar to the plan to prevent founder Dov Charney from taking over the company after he was suspended in June. The retailer fired Charney last week for inappropriate conduct. The company named Paula Schneider as its new chief executive. American Apparel stock shot up 6.5% on the buyout news, closing at $1.14.
Holiday shoppers may come through yet for retailers. The season did ring in with a bit of a Black Friday bust, but this past weekend, things really took off. ShopperTrack predicts $10 billion in sales for Saturday alone. And with Christmas this year on a Thursday, many will have Friday off. That means more people out shopping those post-Christmas sales. The National Retail Federation now expects the 2014 holiday shopping season to ring out as a success.
Exchange-traded funds are attracting more investors. ETF assets just passed the $2 trillion mark. The funds give investors access to baskets of stocks, and there are new niche funds hitting the market, including cybersecurity ETFs and emerging market ETFs.
There's a lot of neat strategies, though, out there, like emerging markets. So anyone can trade in emerging markets. But what about a sector of emerging markets where you're investing in the consumer stocks of those emerging market countries? So, for example, the beer manufacturer in India.
That was Eric Irvin, who runs Divvy, an exchange-traded fund that focuses on stocks with dividend growth potential.
Well, though the open enrollment deadline for January 1st coverage has passed, the full period for health insurance this year will end on February 15th. And, you know, businesses, too, have to get in gear. Let's talk with Kaya Bromley. She runs the company Your Obamacare Advisors to help businesses comply. And what about that thing on compliance? Are they getting it? Are most going to be where they need to be?
It's hard to say. In general, there are a lot more in compliance than there were in the past, but there's still a lot of employers who are trying to find the easy way out. For example, there's an employer that I just heard is waiting till they've got a non-calendar year plan, so they think that they're free sailing until October. However, if they don't find out till October that they weren't in compliance all this time, their penalties will begin to accrue from January to October.
These are huge penalties if they don't come into compliance, too.
Outrageous. I have a client just today that when we calculated his penalty exposure, it would have been over $6 million. By complying, he spent $37,000.
Well, hopefully for the people, the public that is signing up, it'll be a lot easier for them, too.
I hope so.
I can hear that tone in your voice. Kaya Bromley, thanks so much.
Thank you.
Here's a look at the economic calendar. Look for numbers today on durable good orders for November, the GDP third estimate, FHFA housing price index for October, the Michigan Sentiment Index, the personal income numbers, PCE prices, and new home sales. And on the earnings calendar, just one, numbers today from Walgreens. Okay, still to come, later in Chart Talk, part of the world investors should perhaps pay a little more attention to in the coming year, emerging markets. The surprising number of Americans getting their credit report dinged from medical bills they thought they'd already paid. And after this, hiring trends in the new year. Are you ready for that raise, that promotion, that new job? Well, the recovery keeps firing on all cylinders, but there are two areas that are improving, though not as fast as the other sectors, and they are hiring and wages. And that's one reason a lot of Americans aren't really feeling the full force of the recovery. Let's talk with Scott Sargis. He's a headhunter in science, technology, and engineering, and he's the president of the company Strategic Search. And I think one reason, Scott, is that we're not seeing a pickup in hiring, all that dramatic, is because employers have gotten so much productivity out of their employees. Is that likely to change in 2015 and beyond?
No. And the trend is intra-company having more for less. In other words, less layers, less support, et cetera. And this is actually a negative thing because I see in my own field, Bill, that there's two major problems with that. One is more hiring errors because HR managers, for example, are asked to do more, including recruiting. And the other is more positions, including in my field of research and development, scientific and engineering, going unfilled for longer periods of time.
So this layering is sort of a built-in efficiency system that employers are not likely to break down?
Correct. Once again, they want to squeeze more for less. And this is not necessarily a good thing.
All right, if that's the overall picture, Scott, what are the sectors where you're likely to see some pickup in hiring?
Well, there's three big hiring areas. One is big data, second is lean manufacturing, and third is the trades. Let's take them in order. Big data are data scientists who can look at a disparate amount of data and squeeze out a pattern from that. And there's a classic example of this. LinkedIn said that anybody with the word data science on their profile is getting over 100 hits. Second is lean manufacturing. Those are ways to reduce costs and improve efficiencies in manufacturing. Key terms are continuous improvement in Six Sigma. And finally, but not as sexy as the others, is the trades. Your local electrician or your welder. Now, those are areas in short supply and high demand, including the American Welding Institute said that within the next 10 years, there's going to be over 400,000 new positions open because the average age is 54 among welders.
All right, those are the three areas to look for growth. All right, Scott Sargis from Strategic Search. Thanks so much.
Thanks for having me.
Coming up, our Chart Talk trader has a strategy to play the emerging markets area for some 2015 gains. Next, though, don't be surprised if you get a call from a collection agency. That's how millions of Americans learn that they have a common bill they thought they'd already paid. Now, you might think that getting a call from a collection agency only happens to people with bad credit. Well, many who think that are kind of surprised when they get a call from an agency and are told they owe money for a medical procedure they had. Becky Eric is a business reporter for the Chicago Tribune and wrote a fascinating article about this. And it's not just the embarrassing call, Becky. The problem is that they get their credit report dinged.
Hi, Bill. Yes, the government, consumer watchdog for the government, just came out with this report on how many consumers have bad information on their credit reports. It's accurate, but it's derogatory. About 43 million people have credit reports that show overdue medical debt.
Now, it's surprising because this is a different kind of a complaint that consumers had when this happens to them. Tell me how this can occur, because most people think, well, it's just the insurance company taking care of everything.
Well, sometimes the insurance companies and the medical providers, it takes a while to resolve these things. And after a certain period of time, the medical provider, the hospital, will just turn this over to a third-party debt collector. And they, in turn, will contact the credit reporting agencies, and this will end up on people's credit reports. And people won't know this until they get a call from a bill collector or happen to check their credit reports.
Now, to me, this is really outrageous because you've got two entities here, the insurance company and then the medical, whether it's a hospital or a doctor's office. And you're holding the bag, though, while these two parties squabble.
Just to show you how confusing this is, this government watchdog, they look at every single kind of complaint that there is, all kinds of complaints. And medical billing complaints are twice as likely to say, I paid this, than other types of complaints. So there's so much confusion around this subject that this is why the government's looking into it.
And tens of millions of people get hurt by this.
40 million.
All right, so Becky, what can you do to at least forestall this from happening?
Well, some of the tips that this government agency gives: keep good documentation. Don't wait until the last minute to figure out who owes what. So be proactive. And, you know, if you think you're going to have to pay the bill, because the downside is that if you don't, it could affect your credit score in the long run. And also, you know, negotiate with the hospital. Ask them if they can put you on some kind of assistance program where you might be able to pay a cheaper interest rate.
Becky Eric from the Chicago Tribune. Thanks so much.
Thank you, Bill.
We're going to talk about an opportunity every investor should consider in the new year: emerging markets. That's in Chart Talk. Okay, Chart Talk, and Matt Shapiro from MWS Capital is going to give us a little primer on a sector that he thinks might be a good place to park some money, and that is emerging markets. Hi, Matt.
How you doing, Bill?
Take it away.
Well, you know, EEM, the Emerging Markets ETF, everyone watches that. It's one of the leading ones. Down so far in 2014. But for 2015 strategy, I think you really got to look at the emerging markets, but you got to be careful which way you play it because there's lots of different ways to do it.
Okay, so you think that one good way is to wade into it with an ETF, an exchange-traded fund, and you've got a classic.
Well, yes, that's the iShares Emerging Markets. The symbol is EEM. But also, I actually like some of the funds. For instance, I invest in Harding Loevner Emerging Markets Fund. And the one thing a manager does is he'll go into different areas because some of those ETFs are weighted heavily, say, towards Brazil, which had a very bad year with their currency, and of course, Russia, which was terrible. But those are actually also areas of opportunity for 2015. So you kind of want that intrepid money manager to take a look at those beaten down areas.
That's interesting, Matt, because the dice roll point of this is if they're beaten down now, why would they necessarily turn around in 2015?
Well, I think the big story for 2014 was the strong dollar and also this sort of safe haven status of the United States. But you got to look at valuations relative to the United States overseas are actually at one of the highest differentials on record. So you got to put a little bit of your portfolio in there. I know the fashion has been, if anything's not working immediately, get it out. But let me give you one example, is the Saudi Arabian market went into a bear market a couple weeks ago and then went into a bull market. So investors are flip-flopping so consistently, it tells me these are areas you really want to look at.
All right. Matt Shapiro. Thanks so much, Matt.
You're welcome.
Time for us to get up, go out, and greet the dawn. Coming up tomorrow, by the way, how money managers are playing the Santa Claus rally, plus why younger generations seem to be shying away from the stock market. Don't miss it. Glad to have you join us here for First Business. I'm Bill Mahler. Thanks for watching.